Okay, so real issues there. So the issue is your arrears rate. That's not the normal point, that's the abnormal point. Your normal point should be somewhere around 0.4% arrears rate, because people are always going to have problems. There is always somebody who just is going to have 16 credit cards and 5 phone plans. It's going to happen, and they're going to get into problems. So you should be around 0.4. It dropped really low here because just nobody was going to default. They didn't need to. Their paychecks were going up so fast. But you had to get out of that low unemployment rate. It was going to happen one way or another. We had an economic slowdown, and what was before a trough has now become a peak. But your unemployment rate is 2%, well, let's say 1% higher than long run average. As your unemployment rate drops, those arrears will drop. Alberta, yes, we should care about this. We should protect ourselves from this. But we are not in a meltdown environment. Why does this matter? Because everybody out there looking to buy is asking that question to themselves right now. Should I buy today? Isn't it going to melt down? Yeah, it will melt down if our unemployment rate goes to 18%. I guarantee it. Is their unemployment rate going to go to 18%? That's the question, because that's the equivalent of what happened in the United States. How many were here in 81? Yeah, how many have seen a 21% mortgage and an 18% unemployment rate? Does that feel at all like that today? No, it's not. So let's take a look. So there's the issue. So where are prices going to go? I get shot if I'm talking at 1:30. So where are prices going to go? Where are prices going to go? Okay. 2 things that will drive it, we've seen before. The major drivers are interest rates and incomes. What's going to happen to interest rates? Well, they're going to go up. And the Stanley Cup is going to be won by the Vancouver Canucks. What did I leave out of both of those statements? When? No question, interest rates are going to go up. But my God, there's no historical trend to tell you it's going to happen. If you look at the data going back to 1980, and what you'd see, I mean, this is real geek stuff, but what happens when interest rates are going to go up is that the one-year rate goes up first. And the reason that does is what the banks want to do is force you into longer rates, okay, because they want to hedge risk. And then the other rates go up. We have seen for the last 2 years no indication of upward pressure. I don't think it's going to go down. But you know, the Bank of Canada is sitting right now with the Canadian dollar at $1.03 and Ontario's manufacturing industry strangling. You think they're going to jack mortgage rates 3 or 4%? They're gun shy at a quarter of a point. So yeah, interest rates are going to go up. Count on it. But there's not a lot of indication it's going to be tomorrow morning. So interest rate risk is low, but more importantly, it's manageable. It's not going to be up to the, yeah, it'll bankrupt us if it goes up to 18%. It's going to be slow and measured. So that's number one. So what I've taken as a scenario is that we're going to see a quarter of a point this year, 3 quarters next year, and then 0.5% a year after. That is not a forecast. That's a scenario. I want to show you why I came up with that. Okay. So there's a pattern of growth in interest rates that's plausible. There's what incomes are right now. Let's take a look at what's happened to the market entrant. Well, the market entrant income is going to go up because over the next 5 years, they're going to fully move into the 25 to 34 age group, so they're going to have more money because they're older. And then general wages and salaries are going to go up in Alberta. And I took 3.5% per year compared to the 5.1% average. So I put those two together and I have rising incomes and rising interest rates. And that combination will precisely hold the borrowing power of households constant. So if incomes go up at that rate and interest rates go up at that rate, people's mortgaging ability will remain constant. Their paid equity will go up because they're paying down their mortgage. Hold the prices in the Calgary market constant at today's level, so I've got the equity these people have already earned into that. And with that rise in interest rates and with that rise in incomes, housing prices in Calgary will go up by 6%. Remember I said that's not a forecast? What I have showed you is with a relatively slow growth in income and a relatively, I think, plausible increase in interest rates, today's prices can be sustained and then some. You don't care about upside. You care about downside. You care about a collapse in the market. Market goes up, you're happier than pigs in poop. I'm from Red Deer, remember. But what you worry about is it going down. For it to go down, interest rates have to go up faster and incomes have to go up slower than I just projected. That's a slow growth in income, and that's a fairly robust growth in interest rates given the current value of the Canadian dollar. So Calgary housing prices are sustainable, and that's really what vendors want to know, that they're not, our purchasers want to know, is that they're not going to get in and see a collapse. Now, Alberta economy goes to hell, interest rates go through the roof, you got a problem, but you already knew that. What you now can say to people is this market is not a speculative market, it's not a bubble, it's none of those things. There is a logic to why we got here. So these are the questions you have to answer about the future. But remember, 70% of your purchasers have lots of equity. What's going to happen to demand? Well, we've got the population growing by that much. We've got age group, that pattern of growth in terms of age groups. We've got that pattern of headship. So we're going to add about 327,000 more households to the Calgary market, growing faster because the headship rate is oriented to the older age group. So a 60% increase in households for a 52% increase in population. With this pattern of owner occupancy and tenancy, we're going to add 225,000 owner occupied units. 250,000 more units for you guys to sell. So it's going to be great. There's going to be more realtors though, sorry. And we're going to add about 73,000 rental. So growth in ownership faster than growth in rental because, again, the age profile for owning and renting, the owning skewed to the older age groups. What are some of the opportunities and complexities that vendors are going to be dealing with? Well, if you take a look at that age-specific pattern, notice that people's incomes drop off after age 55. So we're taking a look at an older population in age groups where their incomes are lower because, of course, they're retiring. Old people don't have lower incomes than young people because they're old people. It's because they're not working. It's called being retired. So we're going to see those increase in those older households with lower incomes. But they also don't have any mortgages. So they have much lower housing costs. To go back to the owner-rent question, one of the reasons you own is you prepay your rent. It's as simple as that. You're just paying it in advance as you pay off the mortgage. So we take a look at the housing costs for the older population. On average, they drop from actually 25 to 34 has the highest ownership cost per month. But what happens is if you pay off the mortgage, you're basically down to heat, light, and property taxes. So with your decreased income, but your mortgage paid off, you're pretty good. Our older population will be wealthier than any older population ever before relative to the rest of the population. So the own-rent question, if we take a look at the options when people ask the question, well, if you're an owner, you pay more, spend a lot more money in housing than tenants do when you're older, but you pay a lot less when you're younger. So from a financial perspective, the discussion is owning a home is paying for accommodation, but prepaying for accommodation as well. So if tenants spent a little bit more as tenants and put money into an account so that they could retire, they'd be, in terms of financial terms, roughly equivalent to where owners are. The issue is that I'd rather go bowling. Okay. So finally, there is a tax-free investment component that you have an option of realizing if you're an owner. There's no guarantee that you don't have if you're a tenant, but you pay for that investment opportunity. So to compare owning to renting, tenants also should be putting money aside in investments apart from prepaying accommodation. So to answer the question, we have to make it standard, but we also, I speak some Punjabi. And when I talk to Punjabi friends, they always turn and they say, my kids, should my daughter be an accountant or a professional squash player? I never met your daughter. I don't know. It's not, should I be a professional pool player or go work in the oil patch? You can't answer that question because it's driven by people's personal circumstance. We do know that there are people who do not have the employment characteristics to make mortgage payments, and we should not induce them to be owners. That's evil. That's like giving somebody a pony and not thinking about how they're going to feed it. So we know that there are people that don't have that, but if they don't have that characteristics, that's the option of owning or renting is not part of the discussion anyhow. So yeah, non-financial considerations are relevant, but the ultimate line is what's best is what works best for the individual. But from a policy perspective, issues that your board and your governments that you get elected involved in, we hear all of this stuff about housing affordability and helping people own their own homes. Is that really what you want government to do? It seems to me that the policy question is, are people in our communities living in housing that's of adequate standard to our community? I don't care whether they own or they rent it, is it adequate standard? Can they afford to do that relative to their income? But I don't think governments or boards or anybody else really should be in the business of inducing people to own or to rent. Let them make up their own mind. They're adults, they're mature. If they're not, we've got bigger problems than housing.